Himanshu Srivastava, the Senior Research Analyst at Morningstar Advisors, now joins us here on ET Now. Afternoon, Himanshu. This is Nayantara from the New Delhi studio. Look at October. I think it turned out to be one of the worst months in a decade from the FII flows perspective. However, in November, we are seeing a change. I know the month is not over. We are in the third week, but so far, we're net buyers. What went wrong in October? How has that changed in November? And more crucially, is it sustainable for FIs to remain net buyers?
Right. So if you see the flows for this year so far, except for the month of Jan and March, it has largely been on the negative side. We did witness some net inflows in the month of July and August, but the quantum was very small. So it was not surprising to see huge inflows or huge outflows in the month of September and October. October turned out to be one of the worst months in terms of net flows, largely because there was nothing positive to help FIIs into the Indian equity markets. Crude prices went up. Rupee depreciated significantly. There was a liquidity crunch in the market because of NBFC issues. Then we have elections coming up, which made investors or FIs adopt a cautious stance towards India. Then on the global front, obviously US Fed has a hike rates, and then escalating trade war between US and China also had a negative impact. So broadly, if you see on the global front, the way a scenario has moved didn't augur well for the emerging markets, and that is where FIs adopted a cautious stance towards emerging market, and hence they exited India. In the month of November, actually it's a mixed month so far. Out of the 9 trading sessions, FI net buyers in the month in 5 out of them, and net sellers in 4. Overall, they are net buyers to the tune of 114 million US dollar. But there are certain scenarios which have sort of improved. One, the crude prices are down from their highs. There is some improvement in rupee, and liquidity has improved also. So this would have prompted some FIs to take some investments into India. However, broadly looking at the scenario, I don't think that there is too much of positiveness among FIs towards India at the moment.
Okay. Himanshu, hi, Karunya here from the Mumbai studios. Just want to talk about India-focused offshore funds as well as ETFs. I mean, do they also continue to witness outflows in November? And what is the trend looking like from November onwards till over the next couple of months?
Right. So India-focused offshore funds and ETF are part of FIs. In the past, we have seen some different trends, but this time it's been a very negative trend so far. So except for the month of January, in all the other months until October, India-focused offshore funds and ETF category have witnessed huge net outflows. In the month of October, the net outflow was the second highest for this year so far. So the major concern there is India-focused offshore funds, which are considered to be long-term in nature, are seeing more net outflows than India-focused offshore ETFs, which are considered to be short-term in nature. So that this indicates that long-term investors who have invested in India for the last 3 or 5 years have sort of finding it apt time to exit at the moment to avoid some uncertainty that they foresee in the coming months. I don't see that trend changing significantly in the remaining part of the year. I think that will continue. So the provisional figure that I have for the month of November again shows net outflows from this category. The only different aspect that I can see here, different trend, is in September, India-focused offshore ETF witnessed a net inflow of around 117 million US dollar, which show that FIs are not averse in terms of capitalizing on some short-term opportunities that they see in the market. Barring that, the trend has largely been negative out here as well.
Himanshu, actors, tell us this, give us a sense of what's happening with funds and their India allocation. You have the sound in ear of that. Are you seeing higher allocation? Is it being rejigged? Give us a sense of that.
So there have been a rejig. So if you look at some of the global categories or the regionally diversified fund, this can be classified into 3 different categories: global funds, emerging markets fund, and Asian and Asia Pacific funds. So these funds have cut exposure to India. In terms of value, the allocation to India has come down. And 3, in the portfolios of emerging market and Asia Pacific fund, India used to be at number 2 until some months back. Now it's at number 4. It's the 4th highest holding behind China, South Korea, and Taiwan. So definitely there has been some cautiousness across the board among FIIs towards India at the moment, and that is where we have seen some rejig. Although in terms of percentage, the allocation has not come down significantly. It's just 0.5 to 0.6 percentage points. But yeah, in terms of allocation within the portfolio, they are now 4th rather than means earlier they were at number 2.
Okay, Himanshu, we'll let you go on that note. Thank you so much for helping us understand what the flow picture is looking like till November so far and what lies ahead as per your predictions.